Hello traders, Gary Wagner here. It is approximately 10:25 a.m. in Honolulu, Hawaii, Thursday, the 11th day of August. And this is the daily report for gold. We have gold under significant pressure. A major round of profit taking has been currently in play. Did start last night. Current print down about $39, $38.70. You can see the print on the board. 1755.32, 1756.32 bid-ask spread. Of course, traders, you know that we had been accumulating gold throughout the beginning of the week starting on Sunday. We took our first position just below 1700. We got in, I believe, at 1687. That was the first position right around in this area. As the market came and broke above a major breakout, I did recommend that we add to that position, and we took another position at 1724. In the morning, I trailed the stops up to 1760. However, I had a specific target in mind that I was looking for, and that first specific target was right around 1780. When we took that out, as you know, I had my upper level target, which was 1803 to 1809. When the market came and hit that record high, that's 1813, let me show that to you here. As the market came up and made that new high, it really seemed as though it could not sustain it. So my recommendation, of course, was really to move that stop up tight into the market. We moved that stop to 1785. And in fact, pulled a very, very nice profit from that particular move itself. On the first position, of course, we got just shy $98 of profit on that one. On the second position, we got the difference between, call it 25 and 85. So as you can see, we got about $150 on the trade. On today's report, I want to talk about a couple of things. First of all, this round of profit taking was initiated, I should say, by a major raising of margin in the CME. It went up about 22%. It was at around 6,000 per 100 ounces, is now at around 7,000 per 100 ounces. But when you consider the possibilities, as far as I am concerned, there is still some great opportunities in the market. Now, what are we looking at this point? Given the fact that we've hit a record top, we have actually hit the numbers that we were looking for, what in terms of possibilities are there? And on this report, I am going to directly address that and talk about two different possibilities, and we will work together to see which one works out, because in each possibility there will be distinct activity that will allow us to understand it very, very quickly and then act upon it. Now, to really look at the two different scenarios that I see in terms of what is possible to play out, we really want to focus in on A, our Elliott wave count, and then B, on Fibonacci extensions. And here's what I mean. I believe at this point that we are currently in terms of our major count, we are in major 5. When we take that down one notch, my belief is that we are currently in the beginning of a fourth wave correction. That is one possibility. With that possibility, the scenario would be something like this. We had our wave 1 and 2. We have our wave 3 here. Let's assume that our correction takes us either to 1738. We've actually already hit that, or as low as 1708. Those are two areas. My personal sentiment is I always look for a much more shallow retracement based upon the types of market moves that we've seen in this last correction, although anything, of course, can happen. And then from there, we get a fifth wave rally, and we end up at a new record top which could be as high as 1900, and that would be the conclusion. We would actually, at that point, be at 5 and 5. In other words, our fifth and fifth, and then go into a correction. That would be one possibility. Now, the other possibility is that this last wave count here will only be a wave count of 3. 1, 2, 3. And if that would be the case, we would be going into an A, B, C correction. Now, which of those will actualize within the market? Well, if I was a speculating individual, which is what I get paid for, because the fundamentals as a whole have not changed at all, my belief is that we will probably get another sustained rally. In other words, I think that it's more likely that what we're going to witness is our 1, our 2, our 3, our 4, and then our 5 to a new high. That seems a little bit more plausible to me than the fact that we would go into an extended correction at this point. However, this market has shown us one thing, traders, and that is anything is possible. Now, that being said, what would be a couple of logical points in which this correction could in fact take us? And we've looked at one potential, and that potential, as I said, was 1738, 1706. On some other work that I did last night to look at different areas, and as you know, to me, I find that the technique of Fibonacci harmonics, meaning looking at retracements of different time cycles that tend to cluster together, to me tend to hold the greatest amount of potential or high probability. And we get a cluster right in here. This cluster here, this is 1726, 1735. And so you have a scenario in which you've got a nice harmonic band right in here. When we take a look at the marketplace itself, it also appears as though you're getting a secondary bottom right in here. And the next target, if the market cannot hold this area, would have to be the 719 area, which is the beginning of this rally. Realize this is a 133-minute chart, so it is a very, very short-term chart. Now, traders, I'm pulling up a 15-minute chart, and the reason for that, and as you can see highlighted here, don't forget this gap that we had on Sunday. As a market technician, it is our belief that there are many occasions when, if a gap actually forms, at some point that gap will be filled. It can be much later on, but the fact remains we do not want to forget about this particular gap. It's one of the first times I have seen it in a spot market in quite some time, because realize one major point. That major point is that in a continuous market like spot, the only time you can actually get a gap is between New York's close on Friday and Australia's open on their Monday, meaning Sunday on the mainland. Now, when we look at this market, how am I expecting it to play out? And I think that one thing is clear, and I was looking at this yesterday as the market came down, and it's standard, it's textbook 101 market forecasting, and it's quite obvious we have this channel down. And so as this market hit and it came down, it formed a low, it came up, and this next high, of course, was below the previous low. It comes down, it then makes a lower low, a lower high, a lower low, a lower high, a lower low, and a lower high. My expectation is, as long as it's trading within this channel line and these rallies are capped by lower highs than the previous high, and of course making lower lows, then we're still fully immersed in that corrective action. There's no doubt about it. So it was clear as we saw this market begin to come down, this is what really precipitated my belief, one, it hit my target. It went right to the 1803 to 1809. It backed off of it, and then we saw this type of trading activity. Now, where are we right now? As I speak, we're at 1758, but we're also at the top of this channel. What do we want to look for? Well, it's quite obvious, because all we want to see in this particular instance is if we make some new highs here, and most importantly take out that high, that would signal that the correction on a tentative basis could be over, but it has to take that out. And of course, on the subsequent move down, you would want a higher low than the previous low. And that, of course, is what happens when you look at a market that is channeling higher. You get that type of activity. You get higher highs and then higher lows. So we want to see how it reacts in certain areas, but I can tell you this. I believe personally that there's an opportunity that this correction could be short-lived. As I look at the news out there, there's now talk of beware of a 35% correction. My sentiment is let's move to the fundamentals. A round of profit taking is a healthy thing, especially when we see the market really take off in the way it has. Realize that this market has gone up so heavily and so fast that without a round of profit taking, my sentiment is we were lining ourselves up for a parabolic meltdown, and that's not good for anyone. So the fact that gold has fallen the most in 7 weeks as they rose margins is not something that surprises me. In fact, it's something that I welcome and something that we were able to profit from. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange